What is the real problem that you're having today? Could it all be because of what central banks are doing at this time? Let's be honest. The very first thing is that these central banks have been devaluing your currency. They've been printing a lot of money. There's no question about that. And you look at it, there is inflation in every single category. As a result, your currency worth less. That means you're saving more and only getting less at the end of the day. There's no question about that. At the same time, you've got a loss of purchasing power. So when you go to buy something, you've been trying harder and yet getting less as a result. It doesn't mean that you're ruined, though. We need to know the truth. And once we know the truth, we could then thrive and prosper. So we have to get from this point of difficulty over to the point where we're thriving. And in today's video, I'm going to show you what's happening right now. There's a lot to cover. And I want to begin with what's happening with oil. I want to look at some other factors that I know are affecting you directly. Right here, 1/3 of Americans would consider going into credit card debt to purchase holiday gifts. Let's face it, people are willing to go in debt. We know that there's over $1 trillion in credit card debt, and it goes even further. This is where I want to start because you can see people around you in these circumstances where they're getting into debt. How does debt even come to be? It is sprung out of existence, out of thin air. That's the first problem. Okay? There's nothing real behind all of this. You could look at the savings rate, and savings rate meaning that, after all the expenses, everything's paid, there's nothing left. Okay, people have nothing left. That's what this chart shows us. Of course, at the same time, our credit card debt has been rising considerably. At the same time, of course, you've seen it yourself. The student loans now having to be paid back. That's an additional $400 a month. They don't have to spend on other stuff. So you could see the struggle, but they're going to go in the maximum amount of debt. We know that. All right. At the same time, the Fed's next challenge is this $100 a barrel oil. And certainly that puts pressure on the average individual. When you go to the pumps, you're going to be paying more. I know I have. And it is very clear to me that we can see inflation everywhere. So we have the initial problem, which is that the people experience a price increase, and then we have to start asking why. Well, you can point to, that corporation raising prices and maybe it's this government policy, but nobody ever wants to point to the number one factor. And that is if you are willing to devalue a currency, well, you're going to get what you asked for. And we can see this all the time. If they're printing money to buy mortgage-backed securities and they're, buying up the treasuries and all these things, well, that does have an impact down the road, and we have seen that today. But you don't have to just sit there and take it. There are actions that we can take. I'll discuss that at the end. I want you to know, though, that the Federal Reserve, the higher these numbers are and the more, of course, the more damage that's being done to the economy, that gives the excuse of the Federal Reserve to start slowing down on their Fed hikes, to the rate hikes, and of course, they'll signal that they can't do it in the future. Oh, but we're going to be real tough on inflation. But at this time, we can certainly see that interest rates are still at levels what they consider to be restrictive. Now, at the time you're watching this video, who knows what oil is at? It all depends on many factors, but it is elevated compared to where we were recently, and that puts, of course, a stranglehold on the cost of transportation overall. Individuals trying to get from point A to point B, but also stuff. When stuff is more expensive to move, they're going to add those extra taxes and fees and everything. Do you notice that? I want to ask you that question. Do you go to order, whatever it is, food delivery, or maybe it's an airplane ticket or whatever? There's always that fee. Always that fee, gas tax. It's always there, or some additional fee. We saw the same thing with restaurants doing that after 2020. Or we're going to put this little extra tax in there because we've been taking a hit recently, so we're going to charge our customers more. All these things really do hurt the individual. But nobody ever attacks the fact that, just think about this. When you have a policy, an easy money policy for well over a decade, don't you think that's going to cause problems later down the road? I think it's pretty clear. It has been, it is doing that right now. That to me shows us that we have cause for concern because they're not stopping this policy. In fact, the next crisis we encounter as we go deeper into it, not only is the Fed going to slow down on their interest rate hikes, not only are they going to stop, but they now reverse and they now create more inflation. How do you get interest rates to come down? There's something called open market operations. Open market operations are literally printing money. This is done at the New York Fed at something they call the desk. The desk is the place where that action is actually taken, where they do these open market operations. They print money, and that forces the interest rates down. It's not as if they just punch it into a computer. There are actions that need to happen. So they have to print money. And that's a simple matter of fact. So watch for that in the coming months, maybe not even years. Who knows? Okay, these are just some other stocks. I just want to show you that US stocks rise through the last Fed hike unless there's a recession. Okay, and so, depending on the circumstances after they hike for the last time, where do stocks go in the next several days after? Markets love it, of course. The very short term is, hey, that's it, that we're going to party now, everything's fine. But if there's a recession, then it's kind of like, uh-oh, we got problems, we got things to worry about. At this time, where's the recession? They're not going to admit it. The stats are showing up that they were giving us, hey, everything's fine. Okay, well, we'll go with that then, I guess. Canada's inflation quickens to 4%, driven by higher gas prices. This is not just Canada. All over the place, we are seeing the same thing. And of course, if inflation is high, then interest rates have to remain high. Maybe. We'll see. I want to look at some other aspects here of the financial markets, and it's really important that you understand this so that you can thrive and not just survive. That's where we're at today. I think for a lot of people, they're in survival mode. There's a lot you can do. Two things. You can have your self-sufficiency up and, really good thing. And I'll talk about that in a second. I've got an example of somebody that I want to share with you that has, increased their self-sufficiency. And at the same time, we can increase our income. Okay. And these two things together are going to help you out quite a bit. All right. Now, this comes from just pulling the data from Seeking Alpha. If you're not aware of Seeking Alpha, I'll link to that in the description. You can check that out for yourself. But essentially, we're looking at something that I talked about a while ago. You look at the different sectors in the US. Value over the past, you do have that 1 year, but also over the past 3 years. So during this turbulence, where was your money best kept? Value. And that's something that I've been talking about. When you have a little bit of, turbulence and chaos and things that are really uncertain, you go to value because, like in the Warren Buffett kind of way, people are still going to be buying those stocks during the difficult times, or I should say buying those products from those companies when they have their stocks. And so that's why we need to break this down into sector, not just companies, because companies get into scandals and problems. You got to look at this on the sector level. And it's very clear, as I've been talking about for years, value is the place where you want to be when times are difficult. But when you see that there's, a boom time like 2017, for instance, that was the Goldilocks era. And so you would want to put your money in growth because, hey, there's nothing wrong, right? There's no, potential problems according to them. And so we also have this is from Seeking Alpha 2. And I found out this information because I get the emails from them. I'm on the premium and I get the emails from them, and they, I want Amazon's information because it's just interesting to me as a company, but also because I'm an Amazon seller. So this is it. Amazon goes on hiring blitz and bumps up warehouse wages ahead of holiday season. Check this out. I thought it was impressive, to say the least, but it's going to hire 250,000 in full-time, part-time, and seasonal fulfillment center and transportation roles across the US in front of holiday season. Now, of course, that means not everybody sticks around, but 250,000 people. I mean, they have, I don't even know the number at this time, it's well over 1 million people that they employ. But just think about that, 250,000, okay? So it's a huge number, there's no question. And so we see that right now, today, with this one company. What are they doing? But are those jobs the ones that people will, stand over a long period of time? There are all these problems with unions and strikes and so many things happening. Now, this company here, they're saying they're paying them over $20 an hour. But these days, the way it looks, I mean, quite frankly, even though they're being paid much more than a minimum wage, it's still that number there is still burdensome to a lot of people's daily lives. It's like, hey, I'm making 20 bucks an hour. That's great. I'm not making 15 an hour or potentially less, but I still can't pay my bills. And why is that? Is that because of Amazon? Is that their fault? We got to understand the core. Once we know the truth, then we can prosper. Looking at this, home building collapses as market struggles. There's a lot of people talking about the home prices collapsing. Of course they can collapse if there's a lot of supply like we saw in 2008. But if that's not the case and home building comes down and interest rates remain elevated and, no problems. I know there's a lot of people talking about the Airbnb and so on. But if we still remain in the circumstances, in a lot of areas, by the way, there's no Airbnb factor at all in that. Short-term rentals, some areas, as long as housing remains depressed in terms of building, prices won't go down. They'll go up, collapse in the sense, some people refer to as a melt up. That's the worst scenario. That is way worse than prices coming down. People are waiting. You're being sold this apocalyptic scenario, but it's not necessarily going to be spread evenly across asset classes. Remember that. And of course, even within an asset class, it breaks down much further. Housing starts in single and multi-family rental units. This is important. Just wanted to show you, number one, the United States needs a lot of multi-family, quite frankly, because the single families are too expensive. And right now, neither of them are getting built. But there are some permits coming through, so that's important. So that means, in a while, but still not yet. All right, what can you do? Don't just sit there. You've got to take action. I want to see you taking action. And if you do, I'm going to highlight your scenario on this channel, those who share that information with me. But for right now, number one, hold assets that don't fluctuate. If the CEO gets held up in a scandal, if somebody touches somebody else or somebody's accused of touching somebody else, and then suddenly the stock just gets thrown upside down, the company is over here, they're, losing advertisers there. You don't want to be a part of that, okay? And that's why we can hold on the sector level, or we can go broad index, hold it that way. That's the type of thing. I just don't like when people go all in on one stock, because if you went all in on, for instance, Tesla last year, you still haven't made money. Okay? Even though there's so much growth potential, we're being told there's robo-taxis on the street and so on. 1 year, you would have made nothing, no dividend, no nothing. So if you would have diversified into different companies, you could have potentially been making money in those cases. Okay, so you got to expand your thought process on that. I understand. I'm cherry picking Tesla. Okay, I get it. The numbers need to make sense from day one. I see this a lot of times. We can just stick with Tesla as a theme. Robo-taxis on the street in 2020. This is like in 2019 or 2018. Oh yeah, we're going to have 1 million robo-taxis. That wasn't proven. That didn't happen. So watch out. Okay, if there is like development happening already, we are doing it. It's just a matter of us building that and then shipping it to this location and it's done. Okay, that's good. Let's invest in that. But not this pie in the sky type of idea that you hear a lot with artificial intelligence and everything. They're talking about things that are just not on the horizon at this time. So be careful. Okay, and immediately take a financial audit. Okay, and your financial audit is going to make, it's going to be different for everybody, and you could do that on Compass. Compass is totally free for everybody. If you want to, just check out my new website. It is officially launched. Thank you very much for everybody that has been on Compass, which is connected in with this. You can do your financial audit. You can check it out for yourself. So just go to themoneygps.com, and you only got a couple things to choose from. I made it very simple. And of course, take a look here and you will be able to do this financial audit. You're going to go through Compass. You're going to get your financial situation in order. And I really do want to thank you for doing that. When you do, reach out to me, give me that feedback. Okay. It's very important. themoneygps.com. All right. Comment of the day. Daniel, thank you very much. He says, I think one of the biggest problems is that people can't seem to take care of themselves. They rely too much on the financial system. I have no fear of CBDC or UBI because I have built a solar generator. I have seeds and I've grown my own food and I've worked hard to get out of debt. Most people will not take the initiative to do this. They will not attempt to learn. All right. So I want to thank you for that. And of course, I'm planning on doing a case studies section of the channel, working on this. It's taking me a while here to build up the case studies, but I'm going to go directly to you so that we can feature you on the channel. I want to see more of that. The pillars of prosperity, becoming more self-sufficient, increasing your income. These are the things we've got to know. So we have the truth, the devaluation of the currencies, but as a result of that, we know the actions that we can take. These are just a few things, and I want to thank you for being here. Hit that thumbs up button. It's right down there. I appreciate when you do that. Take your financial audit at themoneygps.com. I want to see you over there as well. Take care.